Good evening. It's Vijay here. Today is Sunday, 12th of October 2025. Welcome to our Sunday reflections, where we talk about what's been happening to market in the last few weeks and what can happen in the future. So, if you really look at it last week, and especially after market close, when Trump announced 100% tariffs extra, which means China will now pay 130% tariffs. And this has not been, just one announcement. This was the major announcement which created havoc global markets. We had closed positive, but then the global markets all collapsed. So there is fear. Now, this fear has been coming to us very regularly, especially from Trump, and markets react violently and then they settle down to some pace. Sometimes geopolitical fears are there, like the India Pakistan skirmish in May, sometimes the Israel Iran skirmish, and most of the time, the last 6 months, is the tariff pronouncements by Trump. Now, this is not unique to the markets. See, these kind of episodes have happened in the past. The markets have been resilient so long as they have not been overbought. Normally, markets will peak out on euphoria and on complacency and on tightening of money. Now, all the three, in my opinion, are not there. In the Indian markets, they're certainly not there. There is no complacency. In fact, there is fear. There is no, tightening of monetary activity by RBI. In fact, it is being loosened. And there is, as usual, the corporate fundamentals are not so bad. So, in no manner can we say that we are at a top. At least I cannot see it based on my experience. Like in 1992, I've seen 2000, 2008, 2015, 2018, 2024, 2021. So many times, many of these factors came into play. Now I'm unable to see any factor excepting the fear factor. Day in and day out, we are getting afraid by actions of people around the globe, the leaders around the globe, and also the pronouncements of the so called big fund managers on TV and on social media. You have some experts and financial influencers. Now, I think we need to step back and see where we are and where we can be. Now, nobody can be perfect in making a prediction. Least of all, I am quite poor, is my assessment. But I can give you some directions. They may not be perfect predictions, but they can give you something to think about. Okay, let's look at some positives. For instance, FIs have been continuously selling for the last few months. But if you look at it in October, they are now net sellers of only 213 crores after the first 10 days are over. Just 213 crores. Typically, they would have sold 3,000 crores on average. So if you take 10 trading days, they would have sold about 30,000 crores by now. Even if you take little lower, last month they sold, for instance, 30,000 crores. Maybe by now they should have sold 15,000 crores or at least 10, 12,000 crores. But they have sold only 200 crores. DIs have been buying continuously, and this month actually, they have reduced their buying. They have bought approximately about 11,800 crores. So that is a positive for the month of October. If you remember last week, I had mentioned that this week, that the week which went by, will be very crucial for the bulls because 30,000 crores of IPOs slash FPOs are coming into the market, and this is the highest ever in Indian market history. So I thought if that kind of money is going to get sucked, the market should be actually down. That should not be surprising they're down. But however, if they go up, then it augurs well for the liquidity scenario as far as the capital markets are concerned. And lo and behold, the markets have gone up. So that's a very big positive, which many people are missing. Liquidity is the mother milk of any bull market. Now you saw liquidity being sucked out, and yet the markets went up. You saw FIs dropping their selling to only 200 crores, and DI is continuing their selling to about, so continuing to their buying to about 11,000 crores. These are points you have to note. So, investing in a market which is riddled with fear, we have to step back and make our assessment. However, stupid it may seem for us, but finally, data speaks. And what is data telling us? I've given you two examples. Then look at what happened about generic drugs. US, I was very scared at one point of time that US will put sanctions on generic drugs also because they are put on branded drugs. But Trump has not put it. In fact, he says they will not be considered as under any of the tariffs. So generic drugs, which is India's stronghold in the US, are now exempt. So we need not fear about any more tariffs on generic drugs. Then there was this announcement. Yes, today, just today, I saw where Trump has invited Modi for there's a peace conference going on in Egypt. So he has invited Modi to that. We don't know whether Prime Minister Modi will accept the invitation because it's a very short time for him to decide. But who knows? If he goes, then things may change dramatically in a positive manner for India. Then the major thing, which is what people are fearful about, is the 130% tariff. But you must look at it that China is not retaliated. As of now, they have not retaliated, which is a very good sign. Though Trump has made, the typical bullying noises, saying that there's no point in meeting the Chinese Prime Minister in the next few days, which they're supposed to meet by the end of the month, actually. So Trump has kept it open. He has not said he will not meet. There he says, what is the use of meeting when China is attacking US? Actually, China has not done that, and China has not retaliated also, which is a ray of hope. Now, there's something which you need to also look at negatively. The mutual fund inflows, which I've been mentioning, will be lower, and they were 10% lower. So that is a cause for concern. I'll tell you why it is a cause for concern. See, these mutual fund guys, every single day they come on TV and say market is overvalued. And they are sitting on cash with anywhere between 25 to 30%. These are all big guys. My question to them has always been, if you feel markets are overvalued, why are you going about asking people to invest in your mutual funds? In fact, you should stop taking money into your mutual funds. Just because there was a premium dislocation in the silver ETF, so Kotak mutual fund stopped their fund of funds inflows in the bulk inflows just because there was a small difference in terms of the premium. But the premium was very well justified because physical gold, physical silver is now scarce in India. It is scarce, so you will have this kind of disproportionate increase in premium. But what about your own? If you are going around and telling everybody, the same head of Kotak said, he keeps on saying that markets are overvalued. If they're overvalued, then why are you asking money? You should close your fund temporarily at least. No, that they will not do. Why they will not do? Because they make money on the inflows. That is where their money is, because they charge a commission on that. That's a sad state of affairs of the mutual funds. Now, the people also will become, today in the information is democratized, and people also will become smart and say, okay, you are saying market is overvalued. Why will I give you money into your mutual fund? I think that has started with, if you look at the gold ETF, for instance, in August, there were about 2,000 crores net inflow was there in gold ETFs. In September, it has moved up to 8,360 crores. I think the people are becoming smarter. Whereas the mutual fund managers, even today, say, no, gold is overvalued. It is in a parabola. These guys have not invested in gold. They have not invested. They have always talked down gold, including the Kotak head. Today, he's saying we'll have some proportion of it in gold. I need to call these guys out because they are doing a disservice to the investment community. Somebody has to call them out and tell them that you are doing a disservice, because that is what they've been doing. And gold and silver has been going up. People who have benefited, who are benefiting today, are people who did not listen to these people. If you had listened to these people, you would have invested in, small cap fund, mid cap fund, which have gone nowhere. In fact, they're negative on a year-on-year basis. Not many people see my video. In fact, hardly 150 people see it. But I hope those 150 people will have time to reflect and then understand what these mutual fund guys are doing. They're doing a disservice and a big disservice. You cannot keep 25% cash. Are you telling me that you're not able to find 50 to 60 stocks in this country to invest? I'm talking, there are 6,000 stocks listed. 50 to 60 stocks you can't find. It's a shame. So, mutual funds are afraid to invest in the secondary market, but are very bold to invest in FPOs and IPOs. Have they checked how many IPOs on listing? What have they given? Most of the IPOs have listed below their issue price, and they're trading below the issue price for months together. Now, last week there have been 3, 4 large IPOs. I'm fairly certain all of them will trade below the IPO price in the near future. May not be, maybe on the first day, second day, because of the gray market premium, they may show higher, but I'll be surprised if they trade on the higher side for the next few weeks. Then, so how do we handle this market? Now, last week I had mentioned autos and metals have created an all-time high. So those are the two sectors which we need to look at. Sectors where there is strength. We should go and look at stocks in sectors where there is strength. Clearly, as far as price action is concerned, those two sectors are strong. Then you have the PSU banks, which are showing strength for whatever reasons. Then the government policies are all positive. Now they're putting money in infra, defense, railways, fertilizers. So one should look at, and this is not advice, I'm just saying how one should approach a market, how I would approach a market is one should, this is also, these are books written on that. These are legendary investors who are talking. Buy strength, sell weakness. So what is the strength? Metals, PSU banks, defense, railways, fertilizers, infra, and autos. But autos have been off late, fluctuating a little bit negatively because of this rare earth metals problem, the minerals problem between China and US. So that maybe there is a sentiment overhang. But otherwise, autos are also equally interesting. And gold and silver have had a all-time high weekly close. On Friday, the entire global market, all commodities, everything fell down excepting two sectors, which one gold, one was silver. Everything fell. Bitcoin crashed. You had equities crash across the board. You had copper falling down, aluminum falling down. You had oil falling down, and you had dollar weakening. You had everything down. You had US 10-year treasury yields down. Only gold and silver, which people are saying is overbought. I say it's overbought but underowned. Okay, people are simply talking negative about gold. We have been very confident of it for the last 2 years. We hold to our so not because of anything, excepting that these are the safest sectors. Equity is risk, but if you were to find safer sectors and the strongest sectors, gold and silver clearly because of price action and also fundamentals and also of geopolitics show that there are interesting times ahead for both of these metals. Now, corporate results are mixed. For instance, TCS did not come with good results, though they were talking of AI. The market did not buy it. So one has to be very careful this week because you've got very big companies reporting results. HCL takes reports on Monday. Then you have Reliance reporting on Friday. Infosys reporting on Thursday. I don't think Infosys results will be good. HDFC and ICICI report on Saturday. They may be better. So next week they will come into play. But I'm a little bit scared of HCL Tech, Infi, Reliance. I don't know. You never know what the results are. Look at RBI policies. RBI policies are goading banks to take some risks. So whenever our central bankers do this, that sector benefits. So it may be worthwhile to look at banks. If I was investing right now, we have a few banks in a portfolio. Canara Bank is there. We have Bandhan Bank. We have HDFC Bank. But on intraday, we do trading in Kotak Bank. So we have something like that. So technically, what is my supports are Nifty is 24,300 because that was the last time panic lows happened there. So on Monday, everybody is expecting a global crash. Let us see. Maybe it'll open lower. And there's so many good things happening here. Sometimes the market surprises us. They may actually close higher during the week. Monday, I don't know. I'm not that good at predicting. I'm not good at predicting actually. But still, I'm just saying the direction I'm looking for is that, it won't surprise me if things get stronger during the week. I've given you some reasons for that. In Bank Nifty, it should be 54,200, in my opinion. So, to summarize, I don't think you should fear. I don't think that if we have no opportunities, I think we should invest in strength, which we are doing, and avoid weak stocks like FMCG, IT. I'm not convinced about FMCG and IT. We are not there in that. I'm not saying what you should do, but this is what we are doing. So I don't think you should fear because there are enough number of positive things for India in this environment, including the FIS who are positive. And there is still that 92% short position sitting in Nifty futures. So to that extent, we are protected on the downside. So whatever you do today, I hope it is successful the next week. Thank you for joining.